All right, so you want to know about Lululemon stock, huh?
You've come to the right place.
We're going deep today.
Yeah.
We've got an analyst report that just came out.
Hot off the presses.
Today, December 10th, 2024.
That's right.
And we also have the transcript from their latest earnings call.
So we can see what they're saying about themselves.
Exactly.
That's always interesting.
And full disclosure,
Oh, here we go.
I may or may not have bought a pair of their leggings recently.
You and everyone else.
But let's get down to business.
Okay, let's talk numbers.
The report says LULU is currently trading at $404.79.
Not bad.
But they also say its fair value is only $304.68.
That is a pretty big difference.
So are people overpaying for the stock right now?
Well, it does suggest the market might be a little too optimistic. You know, those fair value estimates take into account a lot of things.
Like what?
Well, not just how well the company is doing right now, but
Yeah.
the whole athleisure industry,
Right.
the economy in general.
It's all connected.
Sick.
Plus, LULU stock has been all over the place this past year.
Yeah, it's had its ups and downs.
The 52-week range is pretty wild.
How wild are we talking?
From a low of $226.01 all the way up to $516.39.
Wow, that is a big swing.
So is that just normal market volatility?
Or is there something about Lululemon itself?
That makes it so unpredictable.
That's where this idea of an economic moat comes in.
An economic,
Moat? Like a castle?
Kinda. It's all about a company's competitive advantage.
Oh, I see.
Like what makes them special?
Right.
What protects their profits from all the competition?
So what kind of moat does Lululemon have?
Well, the report calls it narrow.
Narrow.
And that might explain some of that stock price volatility.
But Lululemon is everywhere.
Yeah, they're popular, that's for sure.
Their logo is practically a status symbol these days.
True, they've got great brand recognition.
So why the narrow moat?
The report points to a couple of challenges.
Okay, like what?
First, the athleisure market is getting super crowded these days.
Ah, so more competition. Exactly. New brands popping up left and right.
Everyone wants a piece of the yoga pant pie.
Exactly.
Okay, so that's one challenge.
What's the other one?
Yeah, what else is holding them back?
Well, they're kind of a one-trick pony.
Meaning,
Their success is tied to that one brand, Lululemon.
I see your point.
It makes them vulnerable.
Vulnerable how?
Well, what if yoga pants suddenly go out of style?
Oh no.
Or even worse,
Wow.
what if there's some kind of scandal?
That hurts their image.
Right.
It's like putting all your eggs in one very stylish basket.
Exactly.
Makes you wonder if they can really hit those revenue targets.
They've been talking about some pretty ambitious goals.
Like what?
They're aiming for $12.5 billion in revenue by 2026.
Whoa, that's a lot of leggings.
It's all part of their Power of 3x2 strategy.
Which is,
They want to double their 2021 revenue.
so they're banking on some serious growth.
Yeah, and a big part of that is international expansion.
Especially China.
They see a lot of potential there.
But can that really offset any potential weakness in the U.S. market?
That's the big question.
Well, let's see what Lululemon themselves have to say.
All right, let's dive into that earnings call transcript.
They just released their Q3 2024 results.
And it's a mixed bag.
Yeah, some good news, some not so good news.
Let's start with the positives.
Okay, hit me.
They actually exceeded expectations for the quarter overall.
Oh, really?
Revenues up 9%
Not bad at all.
to $2.4 billion.
Okay.
And adjusted earnings per share jumped 13%.
Those are numbers investors love to see.
You bet.
But then there's the U.S. sales.
Yeah, that's the not so good news. As flat as a pancake.
No growth at all.
That's gonna hurt, especially since it's their biggest market.
So what do you think is going on there?
It's hard to say for sure.
Is it a sign that they've hit their peak in the U.S.?
Maybe, or maybe they're losing ground to all those competitors we talked about.
That's a worrying thought.
But hey, there is some good news on the international front.
Oh yeah, what's that?
China sales were through the roof.
How high?
Revenue from China soared 39%.
Wow, their strategy seems to be working there.
For now, at least.
The Chinese market is huge.
It has a ton of potential for a brand like Lululemon.
But can it really make up for any slowdown in the U.S.?
That remains to be seen.
Okay, so we've got U.S. concerns balanced by international growth.
And then there's this whole thing about rising inventory levels.
Yeah, the transcript mentioned that.
Explain it to me like I'm a 5-year-old.
Why should I care how much stuff is sitting in their warehouses?
Okay, so imagine a store
Okay.
with shelves overflowing with stuff that nobody's buying.
Oh.
That's basically what rising inventory means.
They've got too much stuff.
They might have overestimated demand.
And now they're stuck with a surplus.
Exactly.
So what's the big deal?
Well, it ties up their money.
cash they could be using for other things?
Like opening new stores, developing new products.
Right.
Plus, it raises the risk of having to slash prices.
Just to get rid of all that extra stuff.
And that eats into their profits.
Ouch. Not good.
And get this.
Yeah.
They're actually planning to increase inventory in the next quarter
Why would they do that?
to support all their new product launches.
So they're doubling down.
It's a gamble.
How so?
They need enough new stuff to get people excited.
Just drive sales?
Right, but too much new stuff could make that inventory problem even worse.
It's delicate balance.
You could say that.
Okay, so we've got the numbers from the report.
And the insights from the earnings call.
But what are the analysts actually saying about LULU?
Well, the report sums up their opinions.
And it's all over the place.
You've got some super bullish analysts.
Thinking LULU is a golden goose.
And then you've got the bears.
Predicting doom and gloom.
It's a real mixed bag.
Let's look at some examples.
Okay, who do we have?
Baird has a price target of $440.
They're pretty optimistic.
But then you've got Jefferies with a target of just $220.
Wow, that's a huge difference.
What explains such a big discrepancy?
Well, it comes down to which factors each analyst is focusing on.
And how they're interpreting the data.
Exactly.
So some are emphasizing Lululemon's brand power,
And their international success.
while others are fixated on those sluggish U.S. sales.
And the inventory buildup?
And all that competition nipping at their heels.
It's all about perspective.
So for us regular folks,
Just trying to figure out if LULU is a good investment.
what are we supposed to make of all this?
It means you got to think for yourself.
Don't just blindly follow the analyst.
Exactly. They don't always get it right.
You need to weigh all the evidence
Consider your own risk tolerance.
and make an informed decision.
That's the name of the game.
No crystal ball on the stock market.
If only it were that easy.
Speaking of trying to predict the future,
What about it?
the report also had this section on insider trading.
Always interesting to see what those on the inside are doing.
Right.
What did they find?
Well, back in September, CEO Calvin McDonald bought a bunch of shares.
How many are we talking?
4,000 shares to be exact.
That's over $1 million worth.
Is that a good sign?
It could be.
Like he's putting his money where his mouth is.
Insider buying, especially by the CEO,
Is often seen as a positive signal.
suggests they believe the stock is undervalued.
But hold on, there's a twist.
The twist.
Their chief brand officer, Nicole Neuberger, sold shares that same month.
Mixed signals.
So what are we supposed to make of that?
Insider selling is always harder to interpret.
How come?
Well, it doesn't necessarily mean they've lost faith in the company.
It could be for personal reasons.
Right, maybe they just needed some cash.
Or they're trying to diversify their own portfolio.
Exactly.
So should we be reading the tea leaves of these insider trades?
Or are they just a distraction?
That's what I'm wondering.
I'd say they're worth noting,
Okay,
but don't base your whole investment strategy on them.
it's just one small piece of the puzzle.
Exactly.
All right, we've covered a lot of ground.
Yeah, we've talked about a lot.
Lululemon's narrow economic moat.
Their mixed earnings report.
And even a little bit of insider trading intrigue.
It's been a whirlwind tour.
But there's more to come.
Oh yeah, we're just getting started.
Stay tuned as we delve deeper into their strategy
Their competition.
and those all-important financial metrics.
We'll be back soon.
If you're finding this deep dive helpful,
Make sure to subscribe to our channel.
hit that bell icon so you don't miss the next installment.
We'll help you make sense of whether LULU stock.
Deserves a spot in your portfolio.
You bet.
See you next time.
So we were talking about Lululemon's big plan.
Their power of 3x2 strategy.
Yeah, to double their revenue by 2026.
Ambitious.
But it's not going to be easy.
Especially with U.S. sales being so flat.
Makes that international push even more important.
China especially.
Right, but what are the risks there?
Yeah, what if things go south?
Well, China's a big market.
Huge potential.
But relying too much on one country,
It can be risky.
what if their economy slows down?
Or people's tastes change.
And then there's always politics.
Geopolitical risks.
It's a balancing act for sure.
to hit that $12.5 billion target.
They're going to need to appeal to more than just yoga fans.
Broaden their horizons.
Exactly. They're investing in their men's line.
Trying to capture a wider slice of the market.
Comfortable clothing in general.
And speaking of comfortable clothing,
The earnings call mentions strong sales for some of their men's lines.
Pacebreaker and zeroed in.
So they're making some progress there.
But is it enough?
The competition is fierce.
Yeah, it's not just Nike and Adidas anymore.
There's a whole wave of new athleisure brands,
All vying for those comfy clothes dollars.
each with their own unique selling proposition.
Some focus on sustainability.
Others on inclusivity.
Some target specific niches.
like performance wear or streetwear.
It's a crowded landscape.
That's for sure.
So who are these up-and-comers that Lululemon needs to watch out for?
Well, you've got outdoor voices.
What are they known for?
Stylish and functional outdoor apparel.
Okay, anyone else?
Worry.
Vori, what's their vibe?
That California cool.
Performance meets laid back.
Exactly.
And then you have brands like Girlfriend Collective and Woven.
Focusing on sustainability.
And ethical production.
Those are just a few
The
examples.
list goes on and on.
So yeah, Lululemon can't afford to rest on their laurels.
Especially with those rising inventory levels.
Right. We talked about that earlier.
It's a potential red flag.
The earnings call mentioned plans to increase inventory even further
In Q4.
to support their new product launches.
So they're really going for it.
It's a risky move.
Let's talk about why.
It's not just about having too much stuff.
What does it mean for investors?
If a company has too much inventory, it could be a sign of trouble.
Like what kind of trouble?
If inventory isn't moving,
It means sales are slower than expected.
it ties up cash,
That could be used for other things,
and it could lead to markdowns.
which hurt their profits.
There are some key financial ratios to keep an eye on.
Like inventory turnover.
It tells you how quickly a company is selling its inventory.
So a lower turnover rate.
Could be a warning sign.
Interesting. So it's not just about the products.
It's about the whole financial picture,
If inventory is piling up, it can impact their profitability.
and that can make investors nervous.
Makes sense.
Okay, so we've talked about their growth strategy,
Their competition.
their inventory challenges.
What does all this mean for Lululemon's future?
Are they headed for success or failure?
That's the big question.
Well, the athleisure market is still growing,
People love comfy clothes.
so the demand is there
But can Lululemon capture enough of that demand?
to justify their current start price.
Especially with all these challenges.
Oh, it's a tough call.
They have a strong brand,
The loyal customer base.
a history of innovation,
But they're also facing some headwinds.
the slowing U.S. market,
The intense competition.
and those inventory risks.
It's a complex picture.
So what should our listeners be watching closely?
To get a sense of whether Lululemon is on the right track,
What's the key indicator?
I'd say keep a close eye on their U.S. sales figures.
If they can turn things around there.
It would be a very positive sign.
But if U.S. sales continue to stagnate,
Or decline.
it could spell trouble. Okay, U.S. sales are the key metric to watch.
And don't forget about gross margin.
Right, you mentioned that earlier.
It's a crucial indicator of profitability.
How so?
It tells you how much money they make on each product.
After deducting the costs of production,
So if their gross margin starts to shrink,
it could mean they're having to discount their products.
or that their production costs are rising.
Either way, not a good sign.
Exactly.
Anything else that stood out to you?
From the earnings call or the Analyst report?
What about that partnership with Fanatics and the NHL?
Oh yeah, that's interesting.
Diversifying their offerings.
Tapping into a new market.
Shows they're not afraid to experiment.
Try new things.
That NHL branded apparel.
Could be a hit with hockey fans.
Smart way to expand their reach.
Beyond their core customer base.
Okay, so we've covered a lot.
Their growth strategy, their competitors,
The inventory situation.
and some key metrics to watch.
We're getting a pretty good understanding of Lululemon. Time to answer the big question.
Is LULU a buy, a sell, or a hold?
What's the verdict?
Well, we've seen some red flags.
Like what?
That narrow economic moat,
Right.
the flat U.S. sales,
That too.
and those rising inventory levels.
Definitely some cause for concern,
Mm-hmm.
but they are doing well internationally.
Yeah, China's a bright spot.
Plus, they're trying new things,
New product lines, new partnerships.
like the deal with the NHL.
So it's not a simple yes or no.
They have strengths and weaknesses.
Opportunities and threats.
It's what makes this so interesting. So, what's your expert opinion?
Based on everything we've discussed, I'd say Lululemon is a holdie right now.
Hold.
Not a buy, not a sell.
So we're sitting tight for now.
Exactly. There's a lot to like about Lululemon.
But those concerns about U.S. growth and competition.
They're significant enough to be cautious.
So if you already own the stock,
Don't rush to sell.
but don't rush to buy either,
Right.
what should people be watching for?
To see if your opinion changes.
What would make you more bullish or bearish?
Keep an eye on those earnings reports.
Okay, what are we looking for specifically?
Evidence that they're addressing those U.S. growth concerns.
If they can show some real improvement there.
It would make me much more optimistic.
And what about inventory and gross margin?
Those are important too.
So if inventory keeps piling up,
Or gross margin starts to shrink,
those are red flags.
that could change the whole picture.
So it's a wait-and-see approach for now.
gather more data, see how things play out.
Even if you're not ready to invest in LULU.
I think we've all learned a lot.
It's been a fascinating deep dive.
We've really gotten to know this company.
Their challenges, their potential.
And that's what we do here on the Deep Dive.
We break down complex topics
Into clear, actionable insights.
So if you enjoyed this episode,
Hit that subscribe button
and ring that bell.
so you don't miss our next deep dive.
We release new episodes every week.
We'll see you next time.